Good morning. You're watching a remote broadcast of Business World Live. I'm Jes Delos Santos. It's 10:30 a.m. this Tuesday in Manila. We are an hour into the trading day. Let's go straight first to our top story. The Policymaking Monetary Board will likely keep rates untouched when they meet on Thursday. That's June 25th. 10 out of 13 analysts polled by Business World expect the Banco Central to leave rates steady. Oxford Economics believes the BSP is likely to take a pause to assess the impact of the spending pickup amid the health crisis as well as previous cuts. For Nolan Arbis of HSBC Global Research, fiscal stimulus is quote, more necessary than a fresh cut at this point. So far, the BSP has slashed policy rate by 125 basis points to 2.75% in an effort to shield the economy from the impact of the COVID-19 pandemic. Recall that the BSP implemented an off-cycle 50 bip cut last April 16 when the entire island of Luzon was put on lockdown. For John Rivera of the Asian Institute of Management, adjusting rates might cause unnecessary impacts on liquidity, which he says may do more costs than benefits. UANP economist Vic Abola also sees a pause but expects a cut next meeting in August when, quote, real bad numbers for the second quarter start coming out. Three other economists expect a cut of 25 bips at Thursday's meeting, given the widening impact of the pandemic. The economy contracted by 0.2% in the first quarter, and the government itself expects to fare even worse in the second quarter. BSP Governor Ben Diokno expects recovery to start by the fourth quarter as he sees growth in key sectors such as agriculture, construction, manufacturing, and public administration. Okay, like what we mentioned earlier, we are an hour into the trading day this Tuesday. Let's see if the index managed to at least sustain those gains, last-minute gains, in fact, that we saw on Monday's trade. Let's try to take a look at the chart right here. You'd see here the index starting Tuesday in the negative zone. It is down by 0.8%. That's actually 0.75% here to 6299.82, really going down to levels that we saw at least in early morning trade. Recall, of course, that the index was on a fall in yesterday morning, going as low as 6249, languishing in the red for the most part of the day before that last-minute bargain hunting happened, which in turn pushed the index higher by 0.5% to 6,347. You have Regina Capital's Luis Limlingan saying that, that selective buying happened after the WHO signal that the pandemic remains to be a deadly threat. Of course, recall that the WHO recorded, at least on Sunday, the highest single-day increase of COVID cases globally. Claire Alvera of stocks likewise echoing that sentiment. You have cases surging offshore. If I'm not mistaken, that has already surpassed 9 million, as well as domestically setting new records. In fact, now you have locally cases going over the 30,000 level. According to Alvear, this sparks fear that another lockdown might be in the offing, which in turn could disrupt recovery efforts. Nowhere is that negative sentiment felt more than how foreign investors acted on Monday's trade. Net foreign selling persisted at 1 billion pesos, extending that 2 billion peso net foreign selling that we saw on Friday last week. Now let's have a check at how some of our leaders and laggards are performing, at least on Tuesday's trade here. You can see here Security Bank gaining as much as 5.5% here. And a lot of interesting story here really for Security Bank. I'm going to jump right into it. One interesting development here is that they are joining the bond fray. Of course, yesterday we did report on BPI, seeking 3 billion pesos through their care bonds offering. This time around, Security Bank, they have a 5 billion peso worth of bond offering with an option to upsize depending on demand. That's going to contain a tenor of 2 years with a fixed rate of 3.125 per year. The minimum set is at 1 million pesos with increments at 100,000 pesos. The offer period is going to start today, June 23, until July 15. This is part of their 100 billion peso bond program. Again, Security Bank starting the day in the green here, leading the pack, even it is up 5.5%. But really, two other lenders here that want to drive focus on, of course, would have to be BDO and BPI here. Reversal of fortunes for 1 year with BDO yesterday. They ended the day in the negative territory. BPI, on the other hand, managed to at least end Monday in the green after that bond offering. But BDO this time around, reversing track here, they are up 2.4%. Question now is the worst over when it comes to these banks rather after the Wirecard scandal? Well, there's a new development on that front here. You have the 1.9 billion euros, according to Wirebank, may have been non-existent to begin with. At the same time, they are withdrawing the full year 2019 and first quarter 2020 financial results. Ernst & Young, their auditor, is in fact also refusing to sign off Wirecard's 2019 accounts over the missing amount. Recall the domestic scenario, including, recall at the same time, on the domestic front here, you have the BSP already clearing the names of BDO and BPI. That's after the two banks also, of course, denied that a Wirecard is indeed their depositor. At the same time, new developments here. You have a German newspaper alleging that an ex-transportation official here in the country is in fact linked to the Wirecard scandal here. But just the same, you have BDO at least for the start of the day gaining at 2.4%. Now from there, let's move on to another bond story here. That's after BDO and Security Bank. You have Aboitiz Power. The power player is set for their 9.5 billion peso worth of bonds. That's after getting the SEC's nod. That's 6 billion pesos in peso denominated securities with an oversubscription option of 3.55 billion pesos. Interest rate, at least for the 2022 bonds, is going to be at 3.125%. Now, for the 2025 bonds, however, interest rate is going to be at 3.935%. The bond offer is set to end on June 26th, with issuance going set at least or scheduled for July 6th. Looking, however, at how the stock is performing, it is now down 1.6% to 27 pesos and 95 centavos a piece. Now from there, from bonds, let's move on to joint ventures this time around with Razon's Prime Infrastructure. They are getting a 50% stake at Solar Philippines Tarlac via a 1.5 billion peso investment to boost Solar Philippines capacity to as much as 800 megawatts. That partnership will see the development of two solar projects in Luzon and Visayas, as well as expansion of the Tarlac Farm's capacity to 200 megawatts. Let's have a quick check of how ICTSI, Razon's ICTSI, is moving, at least for the moment. They are starting the day edging higher, 0.4% to 100 pesos and 40 centavos a piece. But again, before we recap at least our first look at the markets this morning, let's try to check in on the local bourse once again. Still in the red here, down 0.7% to 6,301.58. Let's see, however, if things are going to remain at least in the red for the rest of the day for the local bourse. Here are other stories we're watching this morning. Bus operators reveal that about 14,000 provincial bus workers have lost their jobs due to operational restrictions. They warn that another 10,000 may be laid off because of cashless fare systems. Recall that provincial buses have not been allowed to ply roads in Metro Manila due to the COVID-19 pandemic, which has so far affected at least 10,000 buses. And now that the government is requiring operators to enforce automatic fare systems, bus conductors may permanently lose their jobs. Meanwhile, the Samahang Manibela, Mananakay at Nagkaisang Terminal ng Transportasyon is pushing for the resumption of traditional jeepney operations across the country. The transport group warns that over 500,000 jeepney drivers are now going hungry because of the lack of jobs. Transport expert Rene Santiago backed this call, saying allowing public transport to resume without traditional jeepneys is impractical. That's because there are some areas that cannot be reached by buses and trains, like parts of Cebu and Davao. Now, moving on to other stories, local farmers are calling for a rebound of the country's rice import system following the alleged undervaluation and misdeclaration of nearly 1 billion pesos worth of rice shipments from January to April. The Philippine Star reports that the Federation of Free Farmers is demanding a thorough review and overhaul of the customs system for handling rice imports. This on the heels of reports that misdeclaration and undervaluation resulted in large sums of uncollected tariffs for this year. The Federation indicates that tariff collections could have been higher by almost 900 million pesos had the government rather made proper assessment of rice imports that arrived in the country this year. Meanwhile, the Philippine Rice Research Institute says its prospective budget of 621 million pesos for next year represents a 5% decline in funding levels from this year. PhilRice Director John De Leon said the budget suggested by the DBM did not set aside any funding for capital outlays. De Leon was not able to explain why the 2021 budget is 5% lower, but said that the proposal is still being finalized. Also, to another story here, Fitch Solutions says the Philippines' lack of clarity on investment policy is discouraging for foreign investors. Senior risk analyst Michael Langham said the delays in the 2019 budget approval and the passage of tax reform laws slowed FDI net inflows last year. This year, Langham said another set of uncertainties caused by the pandemic and the ongoing debate over tax reform will further dampen foreign investment. He added that the proposal to lower corporate income tax could likewise deter potential investment for as long as it remains pending in the Senate. Langham explained that the health crisis has already created enough uncertainty as it is, so investors don't need tax and policy uncertainty on top of that. To attract more long-term FDI inflows, he said more clarity for foreign investors is needed. Now, there's been an unprecedented surge in people working from home since lockdowns were enforced, and soon students will join the demand for laptops and gadgets as schools implement blended learning. But how exactly has the tech landscape changed? Let's talk to Manuel Wong, Manager Director of Acer Philippines, to get his insights. Good morning, Sir Manuel. Great to have you here with us on the show.
Hi, good morning, Jess. Nice to see you here. Thank you for the invitation.
All right, sir, let's jump right into it. How has the demand for laptops changed since community quarantine measures were put in place?
Yes, definitely there's a surge worldwide and across industry. During the first 2 weeks of the lockdown, which is in March, not much activities because everyone is just new to this situation. And we just, at the time, we were preparing for the continuity. Not only for us, actually, it's helping our partners or corporate user in that time. Basically, they are searching for solution to for the solution of business continuity. So, for example, those corporation suddenly they have to arrange for their employee to work from home, including the BPO, the call centers business. So during the first 2 weeks, we were busy preparing back end and prepare for the solution that will be required. And actually, we have start early before the lockdown. Inside the company, we established already the risk management committee. So that is for safety first internally for the employee safety and those COVID. We published also COVID-19 handbook for everyone, and also prepare for the business continuity plan, which includes if under the lockdown, then the situation, if our requirement or support arises, how can we manage it? So we were able to identify how to deploy the skeletal workforce during that time, and should the demand or the support needed arises. So we did perform okay to support during the lockdown until end of May because there's still ECQ most area of the country. So during the ACQ, very limited industry were allowed, and we were approved by DTI and the IATF for the operation because we are one of the key industry that is supporting the business. So that is the continuity plan during the lockdown, and then by uh, June 1, when we started to enter the GCQ period, then with the limited operational availability or the more open or some of the store were able to come back to very limited operation, then there's a surge now, aside from the cooperation and SME, that they are very busy and rush for the digitalize in their business process and back-end support for the work from home arrangement. Then comes is the home demand that they are, for many people, they need to improve their gadget for simple as a home communication and entertainment. They need a better gadget, and also more importantly, is the distance learning, teaching, and work from home equipment needed. So starting June 1st, the retail or the consumer segment start to surge, and that is until now quite significant. And so now is the period that we are preparing for the restart of the business for
So,
our for the community, for the business sectors, and also private sectors.
so if I correctly conclude here that surge was only seen, at least for laptops and gadgets, when it was when GCQ was actually implemented during the start of June.
Yeah, for the consumer side, started June because before that, it's only corporate that they are busy trying to get the gadget for their home for their employees home work from home arrangement mostly, and they are digitalized of their operation. So before the June is more on corporate company needs, and starting June because of the GCQ, then the consumer demand surge.
But given that, of course, prior to June, like what you mentioned, it was mostly corporate demand there. Just the same, were you able to meet your sales target?
For the again the total lockdown, the target is nothing to mention because really it is badly affected. But still, we are now in a very healthy trend on the recovery as the whole country is healing or recovering. So currently, I think the is a worldwide, industry-wide um, search or recovery process. But the importance here now is how can we ensure the supply to different sectors for their urgent needs. Now, since the search is worldwide, cross industry, so the supplies we issue, but we have prepare earlier. So hopefully we are really working hard to make sure the availability and more importantly, I said affordability still to different sectors, particularly for the student.
So how exactly are you managing to at least meet the supply chain, considering that there's still lockdowns imposed across the globe? Add to that, China for a period still struggling to reopen its economy. So how exactly do you sustain operations when there's a bit of uncertainty on the supply side?
Well, that's really a big challenge when the starting or the during the first 2 weeks totally locked down, and then even by April, China is still totally locked down. I think most of the products for all brands is made in China, and then the supply chain is there. So until they start to open up by May, then the supply start to come back. But uh, nearly to be fully operational for all the factory, but still because of the surge in the demand, and there are some company might be still affected. So the supply still quite challenging, but we have prepared early, so the supply is continuous. That shipment coming in continuously. Hopefully, the impact will be lessened, and also we are make sure the supply or the availability should be reached nationwide to every corner of the
The
country.
question now is, will there be enough supply, especially with school season set to start in August? Definitely, there's going to be a spike in demand there for laptops and gadgets with blended learning being put in place here. Do you have the enough supply for that?
Supply is continuous, so it will be sufficient, but the timing is not necessary. Sometimes maybe a bit delayed, but since our opening will be in August, and I think by the time the supply or the consumer can get what they need, not a big problem.
Now, in terms of price points here, are price increases in the offing here for Acer Philippines, considering like what you mentioned, there are limitations in exports and imports here. The DTI, for one, is already asking gadget retailers to be reasonable in imposing price increases. So it's that part of the picture here for Acer Philippines.
Yes, by all means, we try to maintain the current prices, and even though the component cost really goes up, it's a supply and demand in the component. So worldwide market, the key component had increased. But in the Philippines, we haven't increased price. We are trying our very best and work hard with the industry partners like our suppliers on key components to continue to supply us, and with a better support, particularly for special segment. That's why we are able to run some program for school and teacher purchase program under our Acer Academy projects. And also we have some special price unit for the learning or for the student market. So it's not easy, but we continue to try our best to make it really that available and affordable. Our mission is really to break the barrier between technology and people. So we continue to work hard on that.
But do you think it will ever come? What do you think would be the worst case scenario that would prompt Acer Philippines to actually somehow hike their prices?
Well, for IT, the the increase in price basically is proportional to the computing power. So with the new generation component come out, particularly CPU, um, by paying a little bit more, you actually always get better computing power. That means the CPU and the whole unit performances. So if still based on cost per bit or the what you are getting, is something still similar averagely, but per unit you might feel in the it's always in every new generation of product coming out, there might be some cost differences, but the performance will be very there's a big improvement as well. But still, we will take care of all segments requirement. So for the entry level for student, performance will be improved, but the cost and the selling price will maintain really very affordable. But for the content creator, like the programmer and other people that you need computing powers, better unit, we continue to upgrade those perform or the product portfolio to make it affordable and available as well. So not only the whole industry now is very interesting. It's not only the growth for the entry is popular, and for example for home use, some people might prefer a better performance for simply for entertainment. The streaming speed should be good, and particularly for the gaming, the performance requirement is really important. But for in general, the application wise also, it needs always better specs.
And finally, what now is your growth target for the year? Are you revisiting your outlook for 2020, considering, of course, consumer spending is recovery, at least the consumer spending will at least somehow be slow for the rest of the year. So, what exactly now is the growth outlook here for Acer Philippines?
We have been very optimistic about growth this year before the lockdown, but of course it changed some quite big deal. So now our growth objective actually to just be ready and prepare for future growth and by performing better to support the country or the cross segments needs. We must very we concern much about the solution the needs for education for corporate because now the survey said also the top investment or for IT is basically number one for remote learning and teaching. Number two is for virtual working space, which is how to make it work from home easier. And number three is video conferencing. That's one of the software we're using now. So these are the top three reasons for people to invest in IT. But now we are entering into the now in the recovery stage, and let's prepare for the growth in the future. I mean, not only for us, it's for the whole country. The business need to change, also be ready for the new so-called new normal. There should be continued limitation in travel and mobility, other constraint. So, but how can we still continue to support the business sector to be in a better recovery path, so as to the distance learning, which is help the academic and education. So we will continue to find not only hardware and software, and we will continue to work with the stakeholder on finding better solutions. It's a continuous journey because new technology, new product, new softwares keep coming up, and we should also continue to explore. Some companies, some schools had start early, so they are ready. They are now entering into already post pandemic and preparing for the growth. But many still just starting. They are still in a stage of searching for solution. It's good and bad. So now starting now, you have more choices to evaluate for different usage from education to business. So business is very important, I mean, to change by digitalization to really help for business to recover and to prepare for growth. And so far, the last 2 months, as in my Microsoft CEO Nadelia, he said we have seen 2 years worth of digital transformation in 2 months. It's exactly what happened in last 2 months. Supposedly, the development growth in the 2 years time happened in just 2 months time.
So definitely a lot of things, at least to keep an eye on for the digital and technological space here. Thank you very much for your insights, Manuel Wong, Managing Director of Acer Philippines. Thank you, sir.
Thank you, thank you. Stay safe.
Okay, quick check of the market movements here. Things are still not looking good for the local index. Are maintaining our position at least in the negative territory here. You have the index down 0.6%. Now at the 6,300 level, that's 6,307.12 to be exact. Of course, lingering concerns here over the pandemic still spreading, with new records being set offshore and domestically as well. At the same time, let's have a check of our leaders and laggards for the day here. Let me just refresh this for a bit. Earlier in the day, we did see Security Bank gaining big. This time around, still maintaining that lead here. They are down up rather for an 0.8%. That's after they did reveal, of course, that they have a 5 billion peso fund offering. You also have a PBO, at least reversing track from yesterday's losses. They are up 3.4%. There are other stocks, of course, gaining bigger. Metro Pacific 4-1 is edging higher at 2.4%. On the losing end, however, you have Robinson's Land down 2.6%. Also, Voitis Power, interestingly, is edging lower here at close to 2% here. It's after, of course, they are investing in Solar Philippines Tarlac and pretty much boosting their stake in Solar Philippines to 50%. Now, also, just when you thought we're done with bonds, we're not. In fact, this one, though, still studying its options. I'm referring to Philinvest Development Corporation. They are considering revisiting bond offering with lockdowns already eased. They are evaluating both peso and dollar denominated bonds. Recall that they did float their 8 billion peso bond back in March. They're particularly interested in raising equity with public float, currently at 10.8%. They are also looking at other sources of income here for the year. Let's say 15 billion peso multi-tower mixed-use complex in Philinvest City. At the same time, there's a property in New Clark City by the second half. However, things looking flat here for FTC. They are still priced at 8 pesos and 10 centavos a piece, at least at the start of the trading day. And then lastly, let's have a quick check here at PH Resorts Group. Dennis Boy, leisure company here, seeking to raise 1.13 billion pesos from a follow-on offering of as much as 450 million common shares, with shares priced at 1 pesos, pesos and 50 centavos a piece, plus stocks there of Yellow Ever is saying, this may affect valuation of PH Resorts, diluting their earnings per share. At the same time, she cautions that the appetite may be weak for leisure businesses given the pandemic and the backdrop here. However, things are looking good here for PH Resorts here. They are up 8 and 3/4% to 3 pesos and 10 centavos a piece, extending the gains as well that we did see for the stock, at least from yesterday. Now, again, let's try to have a quick check of the local boards here. Things still in the red here, down 0.6% at 6,314, at least on Tuesday's trade. And that's the first look in the business day this Tuesday, June 23, 2020. Catch us again tomorrow at 10:30 a.m. I'm Jes Delos Santos. We are one.